Imagine waking up to a world where buying cryptocurrency is no more complicated than purchasing a share of Apple or Tesla on the New York Stock Exchange. For years, this was a pipe dream, reserved for crypto enthusiasts and tech pioneers. But following the seismic shifts of recent years, this vision is now inching closer to reality. The surprising twist? The next big name on Wall Street's crypto roster might not be Bitcoin or Ethereum. Instead, all eyes are now turning to XRP, the digital asset at the heart of Ripple's quest to revolutionize global finance. But with so much legal baggage and regulatory scrutiny, will XRP truly get its moment in the spotlight? Or is mainstream acceptance still just out of reach? To understand why the possibility of an XRP exchange-traded fund, or ETF, is captivating everyone from retail investors to Wall Street titans, let's rewind a bit. The cryptocurrency landscape has undergone a dramatic transformation. In the early days, digital assets were the Wild West, unregulated, misunderstood, and prone to wild price swings. But the tide began to turn in early 2024 when the United States Securities and Exchange Commission, or SEC, gave the green light to spot Bitcoin ETFs. This watershed moment unlocked billions of dollars in institutional capital almost overnight. Suddenly, mainstream investors could tap into Bitcoin's upside through familiar, regulated investment vehicles. No need for digital wallets, private keys, or risky exchanges. BlackRock, the world's largest asset manager, saw its spot Bitcoin ETF balloon past $70 billion in assets within months, a record-breaking feat that sent shockwaves across the financial sector. The implications were enormous. Wall Street, once skeptical of cryptocurrencies, started eyeing other potential candidates for ETF offerings. The market's appetite grew. Investors wanted more choices, more coins, and more ways to gain exposure to the fast-growing world of digital assets. XRP, with its unique focus on facilitating lightning-fast, low-cost cross-border payments, quickly emerged as a front-runner. For years, Ripple, the company behind XRP, had been forging partnerships with banks and financial institutions across the globe. The technology promised to disrupt the old, expensive, and sluggish SWIFT system, which had dominated international money transfers for decades. But there was a major roadblock. The SEC's long-standing legal battle with Ripple cast a dark cloud over XRP's prospects. In December 2020, the SEC filed a bombshell lawsuit, alleging that Ripple had conducted an unregistered securities offering by selling XRP. The case dragged on for years, sowing uncertainty and keeping many institutional investors on the sidelines. Finally, in May 2025, Ripple agreed to a $50 million settlement, a move that many hoped would clear the path for regulatory clarity. However, even after this settlement, lingering doubts remained. Judge Annalisa Torres later denied a joint request from Ripple and the SEC to reduce civil penalties, citing procedural concerns. Was this the end of the legal saga or just another chapter? Despite these hurdles, optimism is surging. The SEC recently extended its review of Franklin Templeton's proposed spot XRP ETF to June 17, 2025, a clear signal that the agency is taking a thorough, methodical approach. Meanwhile, Grayscale, a powerhouse in the crypto asset management world, is racing to convert its XRP trust into a fully fledged ETF. The final decision on this conversion is expected by October 18th. The race is heating up. Volatility Shares has proposed not just a standard spot XRP ETF, but also leveraged and inverse versions, reflecting the growing sophistication and diversity of crypto investment products. Market watchers are paying close attention to the odds. Bloomberg's top analysts recently pegged the likelihood of spot-based XRP ETF approval at 85%, a remarkably high figure given the SEC's historically conservative stance. By comparison, Solana and Litecoin ETFs are sitting at 90%, while Cardano and Polkadot proposals hover around 75%. On Polymarket, a decentralized prediction market, bettors pushed XRP ETF approval odds as high as 98% in early June, before settling down to 87% by mid-June. The message is clear. Confidence is growing, but uncertainty remains. The momentum behind XRP isn't just about regulatory filings. Nasdaq has added XRP to its benchmark crypto index, alongside heavyweights like Bitcoin, Ethereum, Solana, and Cardano. This move is more than symbolic. It signals a growing acceptance of XRP within the mainstream financial system. The CME Group, the world's largest derivatives exchange, launched XRP futures contracts in May, providing another crucial avenue for institutional investors to gain exposure and for the market to demonstrate sufficient liquidity, a key requirement for SEC approval. These futures contracts help bolster market depth and price discovery, two elements the SEC closely scrutinizes when considering ETF applications. Let's talk numbers. Ripple's own reports for the first quarter of 2025 revealed that institutional interest in XRP has soared. The company highlighted a nearly 50% surge in XRP's performance, driven by a wave of new partnerships and expanding use cases. CoinShares, a leading digital asset investment firm, reported a $37.2 million inflow into XRP investment products in a single week in early June. This was especially notable because it ended an 80-week stretch of net outflows, a clear sign that investor sentiment is turning positive. Across the broader altcoin market, assets surged by 15% since the start of the second quarter, reflecting renewed enthusiasm for crypto as a whole. Industry leaders aren't shy about their bullish outlooks. Nate Gerasi, president of the ETF store, points out that multi-asset ETFs like Grayscale's Digital Large Cap Fund may leapfrog individual coin proposals due to their diversification benefits. These funds spread risk by including several top cryptocurrencies: Bitcoin, Ethereum, XRP, Solana, and Cardano, making them more palatable to both regulators and traditional investors. Grayscale CEO Michael Sonnenschein calls an XRP ETF the next natural step after the success of Bitcoin and Ethereum funds. Linda Zhang, a seasoned portfolio manager at Cyprium, notes that institutional demand for diversified crypto exposure is at an all-time high, and that ETFs are the perfect vehicle to meet this demand. Bloomberg's James Seyffart adds a note of caution. The SEC's biggest concern remains market manipulation, and only aggressive surveillance arrangements will win approval. This means ETF sponsors must implement robust monitoring systems, similar to those used in traditional finance, to detect suspicious trading and protect investors. On one hand, the signs of mainstream acceptance are everywhere. Nasdaq's inclusion of XRP in its indices, CME Group's futures contracts, and Ripple's expanding partnerships all suggest that XRP is ready for the big leagues. On the other hand, skeptics warn that the SEC's caution is warranted. Liquidity and security remain sticking points. While the CME Group's launch of XRP futures is a strong step, regulators want to see sustained trading volume and reliable price formation to ensure a fair and efficient market. Custody solutions, how assets are securely stored, are also under the microscope. ETF providers must demonstrate that they can safeguard XRP holdings with the same rigor as traditional assets, using third-party custodians, insurance, and transparent audits. Meanwhile, the absence of heavyweights like BlackRock and Fidelity from the altcoin ETF race raises eyebrows. Nate Gerasi previously predicted that these giants would not remain on the sidelines forever, but so far, their focus has stayed on Bitcoin and Ethereum. Their eventual entry could flood the market with even more capital and credibility. But for now, their absence is a reminder of the hurdles that remain. So, what's at stake if the SEC finally approves an XRP ETF? The ripple effects, pun intended, could be enormous. For investors, an approved ETF would offer a regulated, accessible way to gain exposure to XRP without the technical headaches of managing private keys or navigating crypto exchanges. This democratization of access could unleash a wave of new demand. If the history of Bitcoin ETFs is any guide, institutional capital could pour in at breakneck speed. BlackRock's Spot Bitcoin ETF, for example, amassed over $70 billion in assets within just a few months of launch, an unprecedented feat in ETF history. If XRP follows a similar trajectory, we could see its market capitalization soar and prices climb rapidly. Some analysts predict a rally reminiscent of the altcoin booms seen in past cycles, with XRP at the forefront. But there are real risks. Regulatory uncertainty continues to cast a long shadow. James Seyffart from Bloomberg warns that potential delays for altcoin ETFs are likely, given the SEC's ongoing concerns about investor protection and market manipulation. If the agency imposes harsh conditions or drags its feet, investor enthusiasm could cool quickly. A rejection or indefinite delay could leave XRP stuck in regulatory limbo, limiting its appeal to traditional investors and keeping its price volatile. Remember, even after CoinShares reported that $37 million flowed into XRP products in a single week, this surge followed nearly 80 weeks of outflows, a stark reminder of how quickly market sentiment can change. There is, however, a possible middle ground. Instead of a dedicated XRP ETF, we might first see multi-asset funds, like Grayscale's Digital Large Cap Fund, gain approval. These diversified ETFs include a basket of top cryptocurrencies, with XRP often taking a significant share. Nate Gerasi highlights that such funds could serve as a regulatory stepping stone, helping both investors and the SEC get comfortable with altcoin exposure. The inherent diversification lowers risk, making these products attractive to cautious investors and more likely to win regulatory approval. Nasdaq's decision to add XRP to its indices only strengthens the case for these diversified vehicles. From a global perspective, the landscape is shifting rapidly. The European Union is rolling out its markets in crypto assets, or MiCA regulation, setting a gold standard for crypto oversight. These rules aim to protect investors while promoting innovation, and they're already influencing policy far beyond Europe's borders. In Asia, Ripple's technology is gaining traction at a remarkable pace. The Bank of Japan, for instance, has announced plans for domestic banks to fully integrate XRP into payment systems by the end of next year. If successful, this could transform XRP from a speculative asset into a core component of the global financial infrastructure, regardless of what happens in Washington, D.C. So, what should you, whether you're an individual investor, a crypto enthusiast, or a financial professional, take away from all this? First, stay informed. The regulatory environment is in flux, and the SEC is under mounting pressure to adapt. Keep an eye on ETF filings, watch for signals from big institutional players, and track how global regulations like MiCA are influencing the conversation. If you're considering exposure to XRP, understand the risks and the potential rewards. Diversification remains your best ally. Multi-asset ETFs, when approved, could offer a safer and more balanced entry into this volatile market. The arrival of an XRP ETF would reshape not just the prospects for XRP but the entire crypto ecosystem. Approval could catalyze a new wave of adoption, attracting more institutional players and prompting other altcoins to seek their own ETFs. At the same time, it would put pressure on regulators to harmonize standards globally, fostering greater transparency and investor protection. As former SEC Chair Paul Atkins argues, a fair first-to-file, first-to-approve rule could level the playing field and ensure that innovation isn't stifled by regulatory inertia. Looking ahead, several scenarios could unfold. In the best-case outcome, the SEC approves a spot XRP ETF, triggering an influx of capital, wider adoption, and a surge in XRP's price and market cap. This would cement XRP's place as a mainstream asset and validate years of work by Ripple and its supporters. Alternatively, the SEC could maintain its cautious stance, delaying or rejecting ETF proposals and keeping XRP on the sidelines. In this scenario, XRP's integration into traditional finance would be slowed, and its price would likely remain volatile. A third, more nuanced possibility is the rise of innovative multi-asset crypto ETFs that include XRP, offering a more measured path to mainstream acceptance. Here's a little-known fact. While the spotlight is on Washington, D.C., the Bank of Japan is quietly preparing to launch a full-scale rollout of XRP in domestic payment systems by the end of next year. If successful, this move alone could propel XRP into the financial mainstream, potentially outpacing regulatory developments in the United States. It's a reminder that in the race for crypto adoption, global dynamics are just as important as local politics. So, will the SEC finally approve the XRP ETF, and what will tip the scales? Based on the latest developments, the landmark legal settlement with Ripple, surging institutional interest, mounting political pressure, and the success of Bitcoin ETFs, the odds are more favorable than ever. Bloomberg now puts XRP ETF approval at 85%, and prediction markets have surged as high as 98%. The next key deadlines fall in June and October of next year. If ETF sponsors can prove that market surveillance and custody solutions meet the SEC's exacting standards, and if Ripple's legal issues remain resolved, the long-awaited green light could finally arrive. If you want to stay ahead of these seismic market shifts, make sure to subscribe, hit the notification bell, and join our community. We'll keep you updated in real time as this story unfolds. Now, we want to hear from you. Will the SEC say yes this time? Do you think XRP will become the next major crypto ETF in the United States, or will another asset steal the spotlight? Let us know your predictions in the comments. Until next time, keep your eyes on the markets and your